Hey there folks, in this video I'm going to be talking about a very simple futures trading strategy, right? I know I don't got a lot on futures in this channel, so I thought I'd throw y'all a bone with this. This is specifically with futures, okay? This is not a forex trading strategy. This is one of those rare instances where this is just something that you would use in futures. In a lot of the strategies that I use, like, you talk about like candle confirmation, just the basic market structure shift deals. Like all that can be used in crypto, forex, futures, etc. This is specifically for futures. So I'm gonna tell you why that is the case in this video. Okay. So I got to show you the receipts. I plug this real time in my mentorship chat. I do plug forex in the free chat room as well, like the analysis part at least. But I do plug this in the mentorship chat. And if you do want to be a part of that mentorship, as I reminded you in the last video, I'm going to be opening that back up here very, very soon, few months, come 2026. So if you do want to partake in that, whether you're a forex trader or futures trader, I cover both of that in the chat room. So just put yourself on that wait list and I'll reach out to you. Okie dokie. There'll be a link to that in the video description right here. So we're going to talk about a few different examples and the steps to this strategy, right? You're getting it here on a platter for free. All right. So here's the deal. I have this chart. What do we have plugged right here? I said NASDAQ pivot tested. We're going to talk about that, what a pivot is. Okay. Previous days open. That's what PDO means. Previous days open. Asian session lows taken. Lower time frame shift drawn higher now. That's my checklist. That's my criteria here. Okay, so let's pull it up. Here are the rules. We're going to start with the bias first. Now, here's a big issue. Here's how you need to approach this in regards to bias. I want you to switch your mindset from a predicting mindset, which is what most traders operate from, to a responding mindset or reactive mindset, right? Meaning you're not trying to predict anymore. You're letting price tell you what it's doing, and you're going to listen to it until it tells you a different story. And when it comes to futures, of course, most of the time you're in what? You're in a uptrend, right? It's in an uptrend the vast majority of the time. All right. So what you're going to do is, in regards to the bias, is you're going to listen to the daily chart. And if the daily chart, you need to be writing this down, by the way. Okay. If the daily chart is in an upswing, when I say an upswing, I mean, like, for example, lowest low in the middle, look at my cursor, higher low on the left, higher low on the right, swing low. And you see how after we put in that swing low, its objective is to continuously run out previous day's highs. Runs out right there, boom, runs out there, boom. It's just continuously tagging up higher. When you have this happen, your focus is going to be for buy setups. Now, here's also a instance where you can still look for buy setups even if you get a swing high that's put in. Okay, because sometimes you'll put in a swing high, but it doesn't really hold much significance because like the 4-hour higher time frame market structure is still bullish, and that's the thing here. So like, you could still look for buy setups even after a swing high is put in. Like, for example, you select right here, for example, look at my cursor. Highs in the middle where my cursor is pointing, lower high on the left, lower high on the right. That's a swing high right there. But you could still look for bullish setups in that case, as long as it doesn't have a strong close lower to the downside beneath the previous low. You see how that hasn't tagged out that low yet? You see how it hasn't tagged out that previous low in there? Look at my cursor. Look right there. You see how it closes strong? So I don't really put a lot of weight on that for like a bear scenario, okay? I only see conviction to the downside beneath the previous low. Because when price is in like a very strong environment, if you just notice, if you just go and study it, if it's in like whenever with futures and it's in that uptrend, it doesn't tag the previous low very often. You see what I mean? Like, it doesn't tag the low very often. And the times that it does, what that usually means is you're about to be in that downswing, okay? So as long as price is in that upswing and it hasn't tagged the previous day's lows, you can just follow the trend. Just piggyback the trend up. Don't worry about the predicting, as I said a second ago, about trying to predict where the high is going to be. When it comes to futures, especially being like in the strong trend environment that it's in, your best bet is just flow with that trend, folks. Flow with that trend until it tells you otherwise, okay? When you get a swing high put in to the downside and it hits a strong close beneath the previous low, like right here, for example, look at my cursor. Like, say I put in like a swing high, highs in the middle, lower high on the left, lower high on the right, boom, you get a strong close beneath that. That's where you could pivot, and then you could look for the bearish scenario, the bearish setups, okay? But the vast majority of the time, of course, you're going to be looking for bullish setups, all right? So that's simple. That's how you're going to do the bias. You need to write that down. Remember that. That's how you're going to go about forming your bias. It's that simple. All right, forget predicting, respond. That's very, very important. And this is very important what I'm about to tell you right here. Now we're going to talk about pivots, all right? Pivots are your levels of support that you're going to base your setups off of. And what are those very, very important pivots that I'm about to show you here? Well, there's a few different things you want to note in here, okay? You want to note previous day's open, 9:30. And this is why it's specifically tailored to futures, this specific strategy, because you're using the 9:30 open. Because you understand, like, that's the most volatile time. That's where you get a big influx of volume. And that is why you use it. That is why you use these pivots, because that's where the volume comes into play. That's where the vast majority of the volume is. And wherever the vast majority of the volume is with these particular levels, you're going to see a more intense response off of those levels. Okay, so you have the opening price, but you also have the closing price. Why is that? Why is that the case? Because I mean, your closing bell's coming in, everybody's getting their orders in. You get a big flood of orders coming in into the closing bell, so that is going to make that a very sensitive price point as well. You see what I mean? See what I mean right there? And then you're also going to note previous days highs, previous days lows. Now, like I just said a second ago, previous days lows. If you get like a strong close beneath that into the close, like, that's kind of your cue to look for the door. So, you know, that's really the vast majority of the time, this level, this pivot being previous day's lows isn't going to be that useful to you. And when it's in that strong environment, because it's not going to test it a lot. You'll know previous day's highs too. Your two most important points that you're going to get most of your setups off of are going to be the opening price from yesterday and the closing price. Those are going to be the ones that you get the most setups off of. Okay. And the next question would be like, okay, which one do I go with though? Like, in what instance would I go with that one? Which is would I go with this one? Like the closing price, where would I go with the opening price, right? What you're also going to be utilizing here, folks, is you're going to be utilizing for the best results is ensuring that Asian session low sell side is taken too. And this is where this comes into play. So Asian session begins at 19. Look at my cursor. Or look right here, 19. See a little black box right on my screen. Ends at midnight. So you want to be very aware of that range. And you want to see Asian session lows taken as well. Okay? Once that is taken, because you need a combination of things. It's not just a pivot that does the magic. You got a few things going on here for you. You got the trim backing you. Okay? Because you're ensuring that you're flowing with the tide, flowing with the trim. And you're also using liquidity. Okay? You're using liquidity, being the Asian session lows taken, and that's going to be your key liquidity pool. And then once that's taken, you can then use your pivot to base your reversal off of. And I'm also going to teach you, this is very important too, because there are cases where this happens, so pay close attention. I'm also going to teach you the instances where that is taken in London, and then you can base it set up in New York, because I know, like, you can use this strategy in London and New York session. You'll get setups in both sessions. But there are cases where, for example, like you'll have the Asian session lows taken and you'll have your pivot tested in London. And then come New York session, like it only has a big move off that area. Like, what do you do in that scenario? I'm going to teach you that as well, okay? Because you need to understand both environments to operate from. But we're going to talk about this first. So, like, the fresh test, I would call it, right? This thing's coming down here. And you're taking out Asian session low sell side, which is right there. Look at my cursor. And then you get your pivot in here. All right, you'll get a lot of instances where it's like nested real nicely with that liquidity. Okay. Now, I forgot to mention this. I got to set the expectation. This is very important that you understand this. Very, very, very important that you understand this. I got to set the expectation coming into this. You need to be fine, and if you are not fine with this, then you're going to need to click off the video right now. Click off of it if you're not fine with it. I'm going to tell you right here. If you are not fine with having some days where you don't take a trade, this ain't for you. Well, I mean, really, trading just ain't for you in general, really, if I'm being completely honest. But this ain't for you. You need to be okay. You'll get setups every week. I mean, you'll get usually on average a few setups a week. I mean, that's plenty. That's a plethora. That still is plenty. But if you're looking for like several setups a day, like hyper ultra active trading strategy, this ain't for you. And like I said, trading probably ain't for you either. But so I just got to set that expectation coming into it, okay? Because I don't want to act like you're going to get setups left and right. You're not. You're going to get plenty of setups every week, but on average, that is. You'll have slower weeks, of course. Sometimes we don't get as much. But I'm talking about on average over a large series of trades, you're going to get, a few setups a week, okay? Just want to make that clear. Okay, so what are the rules so far? Let's slow down here. What are the rules so far? You need to see price in an upswing if it's a bullish scenario, okay? And you're going to stay with that bullish bias until you get a strong close beneath the previous day's lows, okay? Like you get that, like that swing high put in, for example. Okay. For a bullish scenario, you want to see Asian session lows taken, begins at 19 into midnight. And once that liquidity is taken and it's coming down into a pivot, that's where you're going to base your reversal off of. So, for example, you see you have the Asian session lows taken out right there. Oh, this is also something else. I forgot to mention this too. What if it takes care of Asian session lows, right? And it gets a push up, but your pivot's down here. Like, what if it takes care of that liquidity, the Asian session lows still some liquidity, and then say, like, for example, just imagine with me that this took out Asian session lows from my cursor wrist, and then it pushes up right here, but it didn't test the pivot yet. But then we come back down later and we test the pivot. Is that still valid? It is. It is. The key thing here, though, is you want to see the Asian session lows still some liquidity taken. All right. It takes it right there because you notice like this pivot didn't have it taken yet. So you'd put more focus on this pivot right here, since like this is the closing price right here. Just remove that for a second. I'll put it back on there later. But you see like right here, that didn't have Asian session lows taken. So it comes down right here and it takes care of that. So now I got that taken. So I got a few things happening here. I got the trend back in me. I got my significant liquidity run, which is very important for a shift. And I need to see the pivot tested, which is what I'm going to base the reversal off of right here. Hence the name pivot. That's where it pivots. You see what I mean? That's where it pivots. It was going lower. It pivots and then it's going to the upside. It has a shift off your pivot. Hence the name, the pivot point. So the next thing that you want to look for here is your criteria for a shift, which we've talked about many times. The criteria for a market structure shift deal, for a high probability market structure shift deal, now for the final S, because of course we got the liquidity run. It's very important that you have the liquidity to frame the shift. That's why I've mentioned Asian session low sell side. You want to have your pivot. We got that. And on the displacement leg, the push up, you want to see a fair value gap, which is 1. Look at my cursor. 1, 2, 3. 3 candles make a fair value gap. If you do not know what a fair value gap is, I'm going to leave a link to my video on fair value gaps in the video description. It is a SMC ICT concept. All right. If you're familiar with SMC, I mean, it's like bare basics. You know what I'm talking about when I talk about a fair value gap, right? So this is your fair value gap. High of the first candle, bottom of the third candle. That leaves behind an imbalance in price. Okay. And you also want to see a strong close above a short-term high. What's a short-term high? A short-term high is this right here. High sign in the middle, lower high on the left, lower high on the right. Little swing high, short-term high. That candle right there at 4:24 a.m. where my cursor is pointing, closed above that high. That makes the shift. That is the displacement that you want to see off of your pivot point. You got the liquidity, right? You got Asian session lows taken. You got your pivot and you got your displacement. You're good to go. You're good to go. So now the question. Where's the PT? Where's the stop going to be? Okay. And this is where I'm going to show you how I'll do it, but you can kind of experiment around with this and make it your own, of course, because the thing about this is with futures, with NASDAQ, ES, you know, being in that uptrend, like you can be a little bit more aggressive because you got the trend back in you. We've already established that you got the trend back in you. So you can be a little bit more aggressive. You can like trail your positions. You can experiment around with this strategy and make it your own. Okay. But here is my invitation to you. Now, what I'll do here is take a Fibonacci from this high. And the reason I'm taking this high right here is because it's grabbed a previous swing point, which technically, as per my rules, makes this a 15-minute deal in range. Now, here's the thing. I know previous day's highs is still intact. That is your draw. That is a very powerful draw. So I understand that it's very likely going for that. And this is another thing, too. This is for your notes. Whenever you still have, very, very important that you note this. Whenever you have previous day's highs still intact, those are the cases where it is a much, much safer bet to be a bit more aggressive on the deal. And that's, you know, highlight that, underline that several times. Whenever you have previous day's highs still intact, at the time that you get your setup and your displacement, you get your entry, you can be more aggressive with your PT. And you can literally, like, if you wanted to, I mean, you could hold out for that right there. As long as you got Asian session lows taken in there and you got your pivot and all that tested, you could hold for that if you wanted to. You could hold for previous day's highs and get a little bit more out of it if you want to. It's up to you. But when we're talking about like a low hanging objective target, how I do it with like my 15-minute is I take the high that grabbed a previous swing point. So you see how like this high right here didn't grab a previous swing point, but this one did. It grabbed these swing highs over here. What I'll do is I'll take my Fibonacci from that to that. I'll find 50%. Next key level above 50% will be the imbalance. So I got the imbalance right there. See what I mean? So for like a target, what you could do here is you could target that right there. Like you could just like take it up the rebalance to fair value gap, for example. Like you could, like right there, you would take profits. See what I mean? Up into that imbalance. That's one way to do it. Another way to do it, which you would actually miss your entry if you did it like this way that I'm about to show you. Another way that you can do it is, you'll still get plenty of setups by doing it like this, but you would have missed it in this scenario. Fair value gap, like I just said a second ago, you get your fair value gap on there. What you can do is you can wait for a pullback into that range. So for example, just imagine with me this didn't happen, and say, because you got your displacement, you see how it's starting to pull back right here. Look at my cursor. That high right there, it pulls back. You could enter off like a discount. Like you put a limit right there to discount. Risk that low where you had the displacement leg and target that high. And then just take like a simple 1-to-1 on it. You'll miss some deals doing it like that, but you'll still get plenty of setups. That's another option. All right. So like I said, those are two ways to do it here. You could measure your most recent 15-minute deal in range and then just take it up into like the next key low-hanging objective deal in that area. Because I know very well, folks, like I knew likely this is going for those highs up there. But if you want to be like in and out of this stuff quickly, that's a good way to go about doing it. Okay. Or again, you can experiment with this, make it your own. You could like say, for example, take some off right there and then trail your position and then just like trail it up into like previous day's highs and do it like that. That'd be a good way to do in this scenario because you know like that's your draw. If that's still intact, that is an extremely powerful draw as previous day's highs. Okay. But that's what you're going to look for. I'm going to give you a few other examples here. You remember a second ago when I was saying, what do you do if you already have the Asian session lows taken? And like say, for example, in London session, right? And then in New York, you don't really, what do you do in New York then at that point? If it already did it like in London, which, you know, a lot of times it will. If you already have that move in London, what do you do then? Like what in that scenario, how do you operate if you already got that taken? Here's the thing. What you'll do then is come into New York session, understand that London, not always the case, but some, you know, if you have like what I'm telling you here, London sets the trend for the day going forward. So if I already have a significant liquidity run in London on Asian session low sell side, I want you to notice what I was talking about a second ago. Do you remember about the previous pivot? I was talking about a moment ago about how that is not, like it didn't have the Asian session low sell side taken. And that's why you would have pivoted to use this right here, being the 930 pivot from yesterday, because at that point you had Asian session lows taken. So you could base your entry off that. But now this is where this pivot becomes useful, because now you already have that liquidity run. And what does that make this now? Look at my cursor. What does that make this push up right here now? What that makes that now is a new deal in range. Okay, that's a deal in range going into New York session. So you have this deal in range that was set in London off because it had Asian session lows taken. And now you have this pivot nested inside of that deal in range. Whenever you have the Asian session low sell side taken and you have a push up like this coming into New York session, you don't need to wait for Asian session lows to get swept again, because a lot of times it won't, because it already had the liquidity run, right? Or when I say, I mean like the low day level, it already had the liquidity run. It doesn't really have an incentive. It doesn't have any incentive to come down there again. So now what you're going to do, coming into New York session is you're going to measure this range. You need to make sure that prices come down to a discount within that deal in range. You take the low, the grabbed Asian session lows in London, to the high. There's 50%. And I want you to notice how you get the pivot in there. The closing price right there from yesterday, right in that area. And so what you want to see next is you want to see price come down to a discount at least, and you want to see it test that pivot. Okay, that's what you want to see. So now you can repeat this process. Once more, you can repeat this process. You're going to wait for a pullback into a discount. There it is. Boom. There's your discount below 50%. And you have your pivot tested right there, which is what you're going to base your setup off of. Okay. So there are two scenarios. If you don't have Asian session lows taken, I taught you that one already. You want to see that taken, you want to see your pivot, you can base your entry off that. Once it's taken and you have an expansion higher like this into New York, you're then going to use that deal in range from the low of day that took Asian session lows to the high. and you're going to base your entry off a pivot within this range and a discount. And then you're going to look for your entry. So you look for your fair value gap, strong close, boom, there you go, right there, got it. You got it, okay? So you see like right there, you get your fair value gap. So like I said a second ago, in this case, I understand like with this scenario, you don't really got as much for that 15-minute, right? Because I mean, it's bullish market structure. That's the thing about it. It's bullish market structure. And when you have a scenario like this, here's your next rule for this variation. Write this down too. If you have a scenario like this where, because down here, it was putting in lower highs, so you could work within that range, even though it was overall bullish. You had like these lower highs being put in, new lows being put in. So you had an option to work within that range right there. You had a lot of a bigger range than you do like right here. When you have a scenario like this where it's very strong and it's very bullish like this, look right here, where you don't really have like any imbalance, you don't have any buy side in there. It's very strong trend. What do you do in that scenario? What you do in that scenario for your PT is you can shoot for high day, being like 930 highs. You got the trend back and you listen to the trend. You got the sell side taken, you got your pivot, you got your dealing range. You can shoot for the 930 highs at that point. That could be your PT. That's one option. Again, that's one option. Another option, like I said a second ago, is, you know, after you get your displacement leg, you got your fair value gap right here. Look, fair value gap right there. Strong close above a short-term high right there. Here was the other option, you remember? Discount. In this case, you would have got it. You didn't get it in London, but you got it here. So you could enter right there. You could literally put a limit right there to get in. You could risk, I didn't remove that. Or you could risk that low right there and target that high. You can just get out with a simple 1-to-1 and be content with that. Or you could do something like this where you, for example, say like you lock in something right here at 1-to-1, maybe go to break even and then target the rest for that high. It's up to you if you want to get a little bit more out of it. Or you could just enter at a discount if you want like a little bit bigger risk reward, if that's what you want to do, right? You can enter right there off a discount, and then you could target that high, and you can get probably, first glance, it looks like to me it'd be a little bit over, it looks like it'd be like a little bit over 2-to-1 or so. See what I mean? Yeah, around 2-to-1 in that area. So, I mean, there's a million different ways to skin a cat, folks. I'm not going to force you into a mode. I'm just telling you how I would do it. I like 1-to-1, as y'all know, but it's up to you, all right? I want you to kind of experiment around with it, do your own thing with that. But that's the base, and then look, boom, right there. So you could have locked in something right there or locked in everything right there. It's up to you. And then you can see this thing ends up ramping up, and so like right there, you see like it comes down again. That still hasn't been taken, so I mean, you could still sit in it. It's up to you. Boom, handled. See what I mean? Because you had that dealing range to work within. It had no incentive to come down there again because it already had Asian session lows taken. So that's why you get that nice reversal that you get right there. All right, so here's another example of this in play. All right, remember, it's in that upswing. It's still very bullish, very strong. So you're just flowing with the trend. Asian session lows is where? Right there, begins at 19, it's at midnight, remember. So mark that right there. You want to see that taken. That's your big liquidity run. And where your pivot's at. All right, what do we want to note for our pivots? You got previous day's highs in there. You got previous day's lows in there. Okay, you got your closing price right there. See that? So you got your closing price right there. And then you get your opening price down there. Does it need to take out Asian session lows first before taking this? No. The key thing, as I said earlier, was you want to see Asian session lows taken, but it's fine if that's like a little bit above it. That's completely fine. The key thing here is you want to see that tested. It's tested. And you want to see that taken. And then once price gets that shift back to the upside is where you're going to look for your leg up. Okay? So you see how it comes down there. You get like that big flush in London. So it comes down, takes care of that. It tests the pivot, but it's really going for that liquidity, so it needs that fuel. It does. It takes it. And then look right here. You get this push up. You see like right here, you get that fair value gap in London. And then right there, look right there. You get that strong close with a short-term high right there. You see that? See that right there? If you want like a low-hanging objective way to do it, you could do it like that, target that imbalance in there. But really, I mean, in this case, like you don't got consistent lower highs being put in or anything. So like I said earlier, you could shoot for the highs if you want to hold out for that. But if you want to be like in and out quickly, same process, high to low, look in that range. If you have a level to target within that range, like an imbalance or a short-term high, then you can use that for like your PT. If you don't, well then you can just run out the highs. So you see you got that imbalance in there. So if you know you want to target that imbalance, you could just wait for a pullback in here. Once it gives you that pullback, you can enter. You see, it never did take out that low. It just kind of chops. And then right there, you get your push up, and then it allows you to take profits. So again, you can lock in there, or you could wait for the highs. It's up to you. Because you're flowing, don't forget, folks, you're flowing with the trend. You're trading with the trend. So you do have that option if you want to. You don't really gotta, it's up to you, right? Or you could just enter off a discount. Remember, you could enter off a discount. You could like risk that low and target the high right there. That's another way you could do it. And there you go. It does end up running out the highs too, as you can see. Another time that you can be hunting is like 8:30 when you get like high impact news. So when you have high impact news at 8:30, same process as always. Like you're going to be, you want to note on your pivots on there. So like you have, now you see like in this case, like the opening price is all the way up there. So it's probably not going to be useful for you, right? Unless like price comes up and it completely breaks out and it gets like a really strong expansion above that and it comes back down to that later, which we'll go over that scenario here later. But if that hasn't happened, then what's going to be useful is probably going to be what in this case? You got your closing price down there. And Asian session lows happens to be like right there. This is one of the, like you see, it took out right there. It took out Asian session lows right there. Just barely missed a pivot. It ramps up, but it's fine. As long as you got that taken, it's fine. It comes down right there. Look, that's from high impact news. So of course you want to let high impact news happen. You don't want to be holding anything into high impact news. It comes down. It sweeps that sell side in there, and you test a pivot. Same process. Look, same process. Once that happens, you can go in and hunt for displacement. You slip right here. You come down. You test a pivot. It trades back above it. You get the fair value gap, and you get your strong close with a short-term high right there. Look, you can get in. You can get in right there. Round these highs, handled. And you see like right here, time stamped, ES lower time frame shift, looking for that leg up into the 15-minute premium, which is literally what I just told you a second ago for like the low-hanging objective area. So that was plugged right there, that setup. Let's go over it. So you can see like in this instance, for example, how it cleared it. Like you see previous day's highs right there, how it's cleared that by quite a lot. Like it did that in London. So you see like it just had a big expansion above that in London in there. And then you also have the Asian session low sell side, which is right there. You see that? So see how it takes that? So you got that tested, but of course, because that's down there, that's where you really want to frame that reversal off of, is right in here. So you see how you're pivoting there. Previous day's highs. A lot of instances, like I said, most instances, like the previous opening price at 9:30 and the closing price at 4 will be more useful. You'll get most of your setups off those, but you'll have setups like this, like we had on last Thursday, time that I'm making this video, where you'll have like a really big expansion above previous day's highs, and then later on, once it returns to that, you got your Asian session lows, all that tested. It becomes useful. It still becomes useful for a pivot in that scenario, that specific scenario. You see what I mean? So it comes down, you take care of the liquidity right there. You got your pivot tested, same process. And say, look, you see I got that 15 minutes. So you can like have a low hanging objective doing that 15 minute, as you saw that I plugged in the chat. Like you have like these 15-minute imbalances in here, so you can be conservative with it. And you could just like take it up into the 15-minute. Go to your 1 minute. So look right here. Let's go back to the 1 minute. You see, you get your confirmation. Okay. So you see like right here, look, see that like right there. You see that fair value gap in there. You see that strong close with a short-term high right there. You see that? That's your confirmation signal right there. You got your liquidity sweep. You got your pivot tested. Okay. And then that's your confirmation to get in. So, and it did in this case, as you can see, it also gave you the discount. So you could enter off a discount. As you can see, you can still get a plethora of setups when you wait on that too. You could enter right there, target that high, and then like trail it up into like this right here. Or you could like enter right there off a discount and then shoot for this imbalance in the 15-minute, and you can get like, at first glance, it looks like maybe 2-1, a little over 2-1. And that's how you can do it. On a platter, folks, it repeats. Week in, week out, you'll get setups with it. Maybe not every single day, every single moment, but you'll get a few setups a week on it. Not every single setup is going to be a winner. Let me set that expectation too. It's not a holy grail, but you can see the power of it. And with futures, you're going with the trend, you're flowing with the trend, considering you got that upswing as I taught you with the bias. And that's how you're going to approach it, folks. Like that's a model on a platter right there. Once again, giving you a model on a platter right there. All right. If you did enjoy, make sure you leave a like on this video. Also comment below other video topics you would want me to go over in the future. And I would be happy to make some videos on it. And if you do want to join the mentorship come next year, there's going to be a link to that waitlist in the video description where we talk about all this stuff live before it happens, give you a game plan, and give you one-on-one help, of course. I'll probably make another video next weekend. So y'all stay tuned for that.